Wall Street corrects as tech stocks led by Nvidia decline. Investors now look for cues from the minutes of the January Fed meeting due later today. Asian markets trade largely lower on a weak handover from Wall Street. The GIFT Nifty is, however, suggesting a higher start for the Indian market. Crude prices slip over 1%. Brent trades around $82 a barrel. Gold prices climb to the highest levels in a week as the dollar weakens. And Hindalco Industries' subsidiary Novelis submits documents with the US SEC to go public on Wall Street. The company is eyeing a valuation of $12 to $13 billion, with the issue priced at 6 to 6.5 times EV to EBITDA. TCS MD and CEO K. Krithivasan expects FY25 to be a better year. However, he warns that there could be some disruptions in the medium term due to the overall economic outlook. The TCS CEO also says that generative AI will not be replacing jobs that require critical thinking, strategic planning, and creativity. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this Wednesday morning. There's a lot to track, but in terms of the global market action, the handover from US has been a little bit muted today. And on the back of that, you have all Asian markets, most of them at least, which are trading in the red right now. I do want to point out that the Hong Kong market, just around 15 minutes ago, it was well in the red. It has recovered more than 200 points, around 240 points, to trade 1.2% higher. So there's been a big move in the Hang Seng market, but everything barring that is in the red right now. So the Taiwanese index, like you can see, seeing a cut of almost 0.5%. You have the Nikkei as well, which is down 90 points right now. Whether you look at the Straits, Kospi, Shanghai, all of them seeing a little bit of red as we kick things off. But looks like the open for our own markets, could still be quite all right, because the implied open suggests that we will be around 50 points higher when we kick things off. Remember, yesterday we shot just shy of that 22,200 mark. So maybe we get a positive start, but let's see if we can hold on to that and build onto that or not. So that's what's really going on across the Asian markets. But let's also talk about the US, because like I was mentioning, Wall Street ended lower as all three major averages were dragged down by tech stocks. You had the Nasdaq Composite, which of course suffered the biggest cut. It was down 144 points, so almost 1% gone there. The S&P 500 lost around 30 points, and the Dow also fell around 64 points at the end of the trading session. Now, where did the pain really come in? It was Nvidia, which saw a cut of more than 4.5%. Of course, the stock has had a solid run in the past year or so. It's up more than 200%. But right now, yesterday it fell around 4%, which weighed on the Nasdaq and, of course, on the S&P as well, because sentiment soured just a day before the chip giant posts its quarterly results also. So that's going to be very important to watch in terms of the US market action. But if we are talking about stocks, shares of Amazon actually put on 1% in market trading, because the company is set to join the blue chip Dow Jones Industrial Average next week, replacing Walgreens. So that is what really played out in terms of the stock-specific action. But now in terms of cues from here, it is going to be the Fed minutes that everybody is really watching to get some kind of direction and, any more insight that we can on where the central bank really stands on rates. Because like we've been telling you, the CPI, the PPI, all of that came in much hotter than was expected for the US market. So the economic data has been much hotter than expected. And on the back of that, the FOMC minutes will be very important to watch. But staying with the US markets, let's also bring you some important opinion. This comes in from Mohamed El Arian, Allianz's chief economic advisor, on where he really sees things headed. Listen in.
2 months ago, we were pricing in 6 to 7 cuts. Today, some people are even saying maybe we'll get a hike. I don't think we will, but it shows you how much the conventional wisdom has shifted. And that's because, consistent with what you've heard just now from Walmart, people realize that there's a limit to goods deflation, goods prices actually coming down, and service inflation stays sticky, which means that getting to 2% is going to be tricky.
All right, that is an important voice coming in on where the US markets could really be headed. And that's what we're looking at globally today. But let's now talk about all of the cues that you should watch from an India market standpoint. We have Ormaz and Sudarshan with us now. Guys, a very good morning to both of you. Ormaz, let me come to you first. We ended just short of that 22,200 mark yesterday, and it looks like the open could once again be in the green.
We'll open above the 22,200 mark for sure, but yesterday's move, definitely the markets have HDFC Bank to thank for that. It was turning out to be another session of consolidation before the index heavyweight chose to wake up and turn around days of underperformance. And HDFC Bank was the star of yesterday's show, the best single day gain since December of 2023, closing at the highest level since the 1st of February, and almost 64% of the nearly 3 crore shares that were traded yesterday were marked for delivery. So a strong session from HDFC Bank, and that took the Nifty higher. What all that also did was it took the Nifty Bank higher as well, and it is not very often that the Nifty Bank gets to outperform the Nifty as it did yesterday, courtesy of HDFC Bank and the other private lenders as well, Axis, IndusInd, who also contributed. And if you look at the Nifty Bank contributors as well, all the private sector lenders were leading the charge on the Nifty Bank yesterday. But what is offsetting the moves in the banking stocks is IT, and it was the IT names, all large cap IT names, Infosys, TCS, all of them ended lower yesterday, and they were the ones that were offsetting the moves in HDFC Bank and the other banking stocks. And if you look at a split screen of the Nifty contributors, on one side you would find the banking stocks that are leading the index higher, and on the other side you would find IT stocks that are keeping the gains in check. IT will also be in focus because of a weak handover from Wall Street. The Nasdaq ended 1% lower yesterday, as you are highlighting. Nvidia, biggest drag there, and the FOMC minutes are the ones to watch out for today, along with the Nvidia's earnings. And Nifty, the GIFT Nifty is implying a 50-point gap up today, so above the 22,200 mark we'll open for sure.
Okay, let's see if we sustain those levels and build on to those gains or not. Hormas, thanks a lot for that. Let's get in Sudarshan as well, who's looking at all of the stock-specific action. Sudarshan, you have quite a long list today.
That's correct. So you know that market is at a record high and most companies are using all the options to raise funds. So I'll start with Hindalco. Novelis has filed for an IPO in the US, and at 6 to 6.5x EV to EBITDA, company can get valuations of $12 to 13 billions. ABB earnings were largely better than estimates, but revenue has come below CNBC TV18 poll at rupees 2,758 crore. But order inflow was strong at rupees 3,147 crore, which is up 35% year on year. CY23 gross margin was at 39.4% versus guidance of 35 to 37%. Whirlpool, promoter has sold 24% stake at rupees 1,277 per share. SBI MF, AB Sun Life and ICICI Prudential MF were amongst buyers. Tourism Finance investor Aditya Kumar Halwasia has picked up 13% stake, and promoter group and Verenium together have sold 13% stake via Blockdisk. Aditya Kumar Halwasia currently holds stake in Cupid and Apollo Microsystems. Union Bank QIP to raise up to 3,000 crore is launched. Indicative price is seen at rupees 135.65 per share, which is at a discount of 4% to current market price. Devyani International sources say Yum Restaurant India may sell 4.4% stake, and total size is seen at rupees 815 crore. Floor price is at rupees 153.50 per share, which is at 7.45% discount to current market price. Swan Energy QIP to raise up to 4,000 crore is launched. Indicative price is at rupees 670 per share, which is at a discount of 10.8% to current market price. Adani Energy, Fitch has affirmed rating at BBB minus and outlook is stable. GOCL Corp promoter Hinduja Global Mauritius to reduce stake by about 1%. Z Entertainment has clarified on ET's report of company reviving Sony merger talks. Company says it is not involved in any negotiations with Sony. GR Infra has signed concession agreement worth rupees 200 crore with Sri Mata Vaishno Devi Shrine Board, Katra.
Okay, got that. Sudarshan, thanks a lot for taking us through all of that stock-specific action. Let's also bring Nigel in. He's looking at all of the cues from the futures and options space. Nigel, it was a bank show all the way yesterday.
Well, that's right. You know, and the private sector banks, they came back, and they came back in style. HDFC Bank and Kotak Mahindra Bank, the two biggest underperformers in the last 1 and 3 years, they came back and they ended at the high point of the day, and that's what definitely helped the Nifty Bank moved up. And yesterday, you know, the Nifty Bank, we were talking about it defending the 200 DMA. Then it went ahead, it conquered the 20 DMA. And in yesterday's trading session, it breached the 50 DMA, which is pretty good news. So a good move is what you're seeing on the Nifty Bank. And the Nifty Bank is going to be in focus today as well, because you'll have the weekly expiry that will play out. But if you pull up a 1-month chart, you'll see the power of short covering. You know, in yesterday's trading session, in fact, we saw a fair bit of action on the Nifty Bank as well. Just take a look at the writing we have seen at around the 47,000 put, and that contract expires today. Now, the power of short covering that I was talking about, the FIs at the start of the series were at around 110,000 contracts on the short side. That's come down by half. You know, so that's telling you the kind of short covering we've seen, which explains why we're up closer around 800 points in this series itself. The Nifty options data as well, there was a fair bit of put writing in trade yesterday, 22,200, 22,100 put, both of them added close to around 35 lakh shares between them. which tells you the near-term support now has moved up to around 21,950 to around 22,000. Gift Nifty suggesting some more green. Let's see if we can build on that. The Nifty bank continues its upward trajectory. That holds the key for me. Back to you.
All right, for all of us, Nigel, thanks a lot for getting us all of those cues as we kick things off this morning. We're going to get into a short break, but when we come back, we'll bring you excerpts from our exclusive conversation with TCS MD and CEO K. Krithivasan on growth, generative AI, and lots more. Welcome back. You're still tuned into Power Breakfast, and let's get you an exclusive now. TCS CEO K. Krithivasan expects FY25 to be a better year than FY24. However, he has issued a warning that there could be some disruptions in the medium term due to the overall economic outlook. Speaking to Shireen on the sidelines of the NASCOM summit, he also said that generative AI will not be replacing jobs that require critical thinking, strategic planning, and creativity. Take a look.
We are continuing to be quite cautiously optimistic, more in the medium to long term. As we discussed before also, there is so much of technology debt, there is so much of technology modernization that needs to happen. Everyone wants to leverage generative AI, so there is so much of work that needs to get done. So we believe there is a lot of opportunity. But there could be medium term to short term disruptions because of the overall outlook in economics. So we remain optimistic, at least cautiously optimistic in the medium to long term. Many of the organizations had hired ahead of the need, ahead of the curve during the pandemic. And as the demand stabilized and demand softened, we started using our existing workforce and train them because we've been training them. So we've been using the bench to fulfill the new requirements. So to call it decoupling is too early. And to factor in and say that it's because of generative AI is not accurate.
So generative AI is the excuse or the alibi to rationalize workforce at this point in time?
Maybe, because say how many other companies are using really today, generative AI is most places we are doing initial experimentation POCs to say that it's become mainstream. And that is causing the reduction in workforce is not accurate.
All right, that is the word coming in from the TCS MD and CEO. But moving on to another big CNBC TV18 exclusive now. Rajiv Jain of GQG Partners is one of the largest foreign investors in India now. And in an exclusive conversation with my colleague Prashant, he explains his thought process on PSU companies. Remember, GQG holds pretty meaningful stakes in both NTPC and SBI. So listen in to what he had to tell us.
We looked at the oil names and if they were more liquid, larger liquid, probably would have bought them because for last 2.5, 3 years, we've been very positive on a lot of PSUs. I mean, include State Bank of India, NTPC, Power Grid, and we own in some small and large way. I think some of these are basically look at our size and scale. We can't execute because sometimes blocks are not available. By the way, LIC is the same one. We would have loved to buy that. We couldn't find any blocks last year, early last year. So I think some of these are just hard to execute from our vantage point because we like to run very constant book. But I think one thing which is, and these were not simply cheap. What we saw was just much more tighter management. I mean, if you look at NTPC, we quite like how the current management has done a much better job versus historically. So there's this sense of urgency you're seeing in a bunch of these, and I think they're also getting a lot less intervention from Delhi, which was a chronic problem historically, right? So in last 10 years, the intervention has gone down dramatically. In fact, they pushed to hire some very competent people, a lot of a lot of these companies. So I think long term we like these, but obviously today a lot of them are done well. We still like them, but our problem sometimes is that we like to run constant portfolio and just hard to execute because those blocks are hard to find. But otherwise, I think, and as you know, these things are very under-owned by vast majority of foreign investors too, because there's this perception there that state-owned companies are always bad. Nothing is always bad, and nothing is always good for that matter.
All right, that was just a small snippet. You can catch our entire conversation with GQG Partners is Rajiv Jain at 9:30 a.m. today and then all through the day on CNBC TV 18. With that, we do need to get into a short break now. But on the other side, we're going to shift focus and talk about the commodity markets. All of the updates coming up on the other side. Welcome back. Hope you guys are having a good morning. Let's also bring you the latest updates from what's going on in the conflict between Israel and Hamas now. The United States on Tuesday once again vetoed a draft UNSC resolution on the war, blocking a demand for an immediate humanitarian ceasefire as it instead pushed the 15-member body to call for a temporary ceasefire linked to the release of Israeli hostages. Remember, this is the third such veto by the United States since the start of the Israel-Hamas war. And while the United Kingdom abstained from the vote, 13 council members voted in favor of the draft resolution, which was drawn up by Algeria. So that's an important update coming in. But let's also get a check on what's really going on across the world of commodities. We have Manisha joining us. Manisha, take us through what's happened overnight and where things currently stand.
Thank you for that, Pavitra. Well, overnight we did see the crude oil prices decline by 1.5%, but they seem to be regaining some ground right now in Asia. Russia reiterating that it is pledging output cuts of 500,000 barrels per day. Also, the Russian oil refining is down by 7% till time in 2024 are some of the supportive factors. Having said that, the markets will watch out for the U.S. crude inventories. That data comes in today. But the delayed U.S. Fed rate cuts continues to weigh on various asset classes, more so in case of commodities. Is the reason that you have seen metal prices continue to decline. There was little cheer that the space took from the China rate cuts, even as China cut the 5-year LPR by 25 basis points. The markets are still looking at weaker demand on China in ground, and then there is slow economic growth in Japan and UK as well now. That continues to weigh on the metal prices right now.
Okay, Manisha, thanks a lot for getting us all of those details on the commodities pack. With that, we have to wind down on this edition of Power Breakfast with the news that most of the Asian markets are lower, but the GIFT Nifty is implying that we could start around 35 points in the green. Thanks for tuning in. It'll be a Bazaar morning call on the other side.